Hi everyone, this is Martin and thank you very much for tuning in to this new video. It's about the ABC free signals that I sent out last week, May the 23rd to the 27th. So this is the review of those signals, and the theme of this video is the ATR take profit levels. Okay, now I choose to calculate my profit or take profit levels based on the ATR indicator. First, the ATR indicator calculates the average range of price movement over a given period of time, and in our strategy, we use the 14-day period. This means that you have a really good idea of how many pips the next candle will move based on an average number of pips over the last 14 days. Its main purpose is to measure volatility and helps me forecast fairly accurate take profit levels. This strategy produces many more winning trades than losses and has proven to be successful for almost 1.5 years. In this video, I'll show you what I do when I enter a trade, how I use the ATR indicator to give me the take profit levels, and why it's not giving me the results I'm expecting right now. The markets are constantly changing. I'll review this past week's free trade signals for a better explanation and give you my thoughts. Okay, now this is me right here. My name again is Martin. I'm a proud Canadian trader. You can see that with the red maple leaf down below. And if you guys want to send me, if you guys want to receive my free signals, there's no form to fill in. There's nothing to pay. It's entirely free. There's no credit card information to give me. Again, just send me an email telling me you want to receive my free trade signals. And again, send it to here, mskyj007 at gmail.com. Okay, so I'll have more on this a little bit later in the video. Now, before we look at the charts, before I show you what's happening with the markets currently, and why perhaps the candles are not moving as much as they should be. I've got my own thoughts on that. But before I do that, my free signal service is an educational program only. I'm trying to teach you how to trade correctly and not give you any specific investment advice. Okay, so we really care a lot about our risk money management. And guys, it's so important to understand that that's your number one job in Forex trading, is to protect your capital at all times. Okay, let's take a look what happened this past week. We had a carryover trade from the previous week, all the way back from May 19th. I sent out a free signal called the buy. This is gold. XAU stands for gold. So buy gold versus the US dollar. It was a big winner for approximately 280 pips. It did hit the second take profit level, okay? And this currency pair gained 1.52%. So that was really, really, really good. Okay, then this week here, our very first trade signal I sent out was the sell US Japanese yen. And currently this trade is still open. It's going sideways, and we'll go to the charts in just a moment. I'll show you exactly what happened. Okay, so the next trade is May the 25th, the next day, and I sent out a signal to buy the British pound versus the Canadian dollar. Again, this trade is still open. So we haven't lost on any of these trades just yet. We've got to have some patience. This is one thing I teach everybody, and this trade is still open. So the next day after that, I sent another signal, May the 26th, buy the Euro USD, and again, this trade is still open. When I say open, it did not reach our first take profit targets. It did not reach our stop loss. They are all kind of going sideways. I still have a lot of confidence in these trades, so it's patience. Is the number one thing in trading, guys. You've got to have that, and right now they're still open. So we're going to take a look at the charts, see what happened. Before I do that, this past week again, we won a total of 280 pips courtesy of this gold by the gold versus the USD. And again, 1.52%. So far, since the beginning of October 2021, since I started keeping these stats here, we're up 4,547 pips, averaging approximately 197 pips per week. So if you guys want to receive these free trade signals, again, there's no cost. There's nothing to pay for or to buy. It's totally free. So just send me your email, okay? And I'll have more of that a little bit later in the video. So far, for the last 23 weeks, we're up approximately 28.12%. And when I say we're up, that means this is what the currency pair is appreciated by. Does not mean your own account balance, okay? Depends on what you have in your account and what you made. And this is for the currency pairs that won. Okay, so we're now going to go to the very first chart. And before we do that, I'm going to give you one really good reason as to what's happening in the markets. I mentioned at the beginning, the markets are changing. And again, you can see right here, the markets are contracting. So this is what's happened from May the 12th to the May the 26th. Okay, you can see each one of these colored lines represents an individual currency. Okay, this red line, for instance, you can see it ends up here is the US dollar. Okay, the green line here, the bright green, again is the Canadian dollar. Okay, in between the blue one here is the euro. Okay, the pink here, the bright pink is the Japanese yen. The blue, the thicker blue line here is the British pound. We get the New Zealand dollar in yellow. And this kind of beigey, creamy line is the Australian dollar. So you can see, guys, that price is contracting, and when all the individual currencies are coming together, the markets are contracting, and there's not much volatility, and that's why. Whenever we enter a trade, it's very difficult to make a lot of pips, since a price may just go up one more candle, then come back down, or may go up a wee bit and then come back down, may go back down, then go back up. And so the markets are either sideways, or they're just the volatility is just diminishing, making it very difficult to get really good entries. Okay, so I want to show you this graph, guys. This is the currency lines strength calculator indicator, I should say, and you can see everything's coming together. Okay, and you can see it's just bunched up. Now these are the individual currencies. Okay, so that's what's happened there. I just want to show you that. That's one of the reasons. You can take a look with the very first trade, guys. This is the buy gold versus the USD. This was highly successful. I'm going to open up the charts, and this is the entry. This is what I saw when I sent you the signal. So we are coming off a very large bullish candle, you can see right here, and I issued a buy at 1840. That was the entry. First take profit of 1856, second take profit of 1868. So I was expecting price to go higher, okay? And so that was my entry. Again, it's really important to keep track of your entries for future review. And now I'm going to switch to the larger chart to show you what happened. Okay, so again, guys, we got in right here, 1840. Okay, and you can see with this candle, it went up a bit, went down, and then ended up right there. The next day, price went all the way up to here, and actually hit our first take profit of 1856 and then came back down. And if you're still in the game and looking for price to reach the second take profit, it did with this big candle right there. It did hit our second take profit of 1868. Okay, so very successful trade, a lot of pips there. Congrats to all of you who took the trade alongside with me. And I do want to mention that I take every single free trade signal I send out to all of you. I take each and every one of those trades. I just want to let you know that I'm not I'm doing what I'm telling you to do, okay? And I'm highly successful. And if you follow my process and you follow my trade signals, you're going to do very well yourself, okay? As long as you understand what risk management is all about. Okay, now the second trade, this was on May the 24th, actually. This is incorrect right here, but right here you can see it's May the 24th. I sent out a free trade signal. Sell the US dollar versus the Japanese yen. Let's open up my entry window. This is exactly what I saw, guys. I sent out the signal. 126.88 was the posted entry, and expecting price to go down to 126.14 first profit, 125.68 for the second take profit. Here's our stop loss, 128.67, guys, and I issue stop losses alongside with the first and second take profit targets for each signal I sent out. So this is what happened, and let's take a look at the actual results. Okay, I'm just going to close this window, and here we go. Now, this was our entry right here. This was the signal candle with this big black bearish signal candle. There's the actual signal. We got in right there, and you can see price went up right away on the day that we entered, and it closed right there. Okay, I want to talk about the ATR now. So this is what I do when I issue a free trade signal. Okay, I base my first take profit target, in this case 126.14, on the ATR. And when I looked at this candle here for the past 14 days, remember we're using a 14-day period for the ATR. The ATR was 124 pips. Okay, so basically, for the last 14 candles, on average, each candle was moving approximately 124 pips. So based on that, I calculate the first take profit level at 70% of the ATR. 70% of 124 is 86 pips, okay? And that's why the first take profit here is 126.14. So it's approximately 70%, because I'm figuring, well, if the average 14-day period, the candles move on average 124 pips, surely, and very conservatively, price is going to move at least 86 pips, right? And you can see it didn't. Okay, so this next day, this candle actually moved up, and just letting you know, okay, the total ATR, the price move, the total range on that day was 81 pips, so it didn't even get close to 124. Now this next day, the ATR was 98 pips, so from the bottom to the top, the total range was only 98 pips. Again, well below the 124. So you can see the markets are contracting. The volatility isn't there. It's not moving. And here, again, price moved from here to here. And it only moved 58 pips. Now on Friday, I think a lot of traders were getting ready, especially in the U.S., for the Memorial Day holiday, which was on the Monday. But anyways, very low volume. Price just didn't move the way I want it to. And you can see right here, when price moved up, okay, it did not go higher than the previous black candle. This is a big clue. This moves sideways like a doji, small doji, very tiny doji, so very little movement. And price could still come down to and meet our first take profit level. Now, note in one of my emails, I asked you to move the first take profit level from 126.14 to 126.43. So if it comes down, it just has to come down to 126.43, and we'll make some pips at least. Okay, so that's the sell US Japanese. Keep this trade open, and let's see what happens with the market session opening Sunday and Monday. The next trade I sent out was the buy British pound Canadian dollar, guys. Let's take a look at the entry. Okay, and you can see here it looked like a really good setup. Price is moving up. You can see this is a bit of a resting candle, and I expect the price to move even higher to hit at least our first take profit level, 161.84, and then our second take profit level. There's good momentum coming into the market. You can see that with the indicators below the chart, and there's no reason why it wouldn't go a bit higher. But again, let's take a look to see what actually happened. Okay, and there we go. So here you can see that we got in right here. Okay, right there. Okay. This was the signal candle, so we got in right there. Price did actually go up, and here's the amazing thing, guys. Price only moved up from the entry here. This is the GCAD, so it only moved up. It actually moved up 61 pips, and missed our first take profit level by 3 pips. Amazing. We missed a big profit just by 3 pips. It didn't quite go high enough. So here's the first take profit level, and then came all the way down, and then the next day came down a bit more. Now, I want you to take a look that the total range was only 61 pips. The ATR, and what I calculated my first take profit, the ATR was on that day 135 pips. I'm sorry, not on that day, but over the last 14 days, the ATR, the average daily range, was 135 pips. So I calculate my first take profit level here, 1.6184, at only 70%, and 70% was 94 pips, okay, from the close of this candle here. And it did go up, but it only went up, like I said, 61 pips. Didn't quite go high enough. I expected it to go obviously beyond the first take and end up and the close end up between the first and the second take profit level, but it went up all the way, missed our first take profit by 3 pips. And so you can see again, the volatility just isn't there. We did miss. We did not, and did not get our first take profit target. Now, in one of my emails, I also said to lower your first take profit target from 1.6184 to 1.6168. Just lower it down. So if price goes up, this should be an easy enough target to reach, and then we will be a winner. Okay, so again, keep this trade open. Again, we've got to have some patience. And now I'm going to get on to my next and final signal I sent out for the week. It was the buy Euro USD that was sent out on May the 26th, guys. Let's take a look at the entry. This is what I saw. Okay, and you can see the entry was right here. Okay, well, here's the signal candle, and there's the signal. Everything looks good down below. Okay, so we had a bullish candle, nice bullish candle that closed near the high of its range. Okay, and at that time, when I checked over the last 14 days, the the total ATR was 98 pips. So over the last 14 days, okay, going back with the candles, the average daily range was 98 pips. I set my first take profit level here at 1.077 at 70% of the 98 pips, and that was only 68 pips, guys. So price only had to move up 68 pips, and we'll take a look, see what happened on the big chart. Okay, so let me just close that down, and I'll do that right now. Okay, let's take a look. So here was our entry again, right there. Price did go up. Take a look with this high shadow, this high wick right there. Okay, and you can see it only moved up 34 pips. Now, even though it moved up 34 pips, I was expecting it price to go at least 68 pips, which is the 70% of the 98 pips for the 14-day daily range, right? But we missed our first take profit target of 1.077. We missed it by 13 pips. So again, guys, just very little volatility, guys. And I believe the total range on this candle was only 68 pips. So again, well below the average daily range over the past 14 days. Again, I'll repeat, that was 98 pips. This candle where we got in only went 68 pips in total. It went up 34 pips to the high, then came all the way back down. Another like 34 pips. So the total range on that day was only 68 pips. So again, very low volatility, and that's one of the reasons, guys, we are not making our trades, and we just got to have the patience. You can see sideways, right? Price is going sideways, up, then up a little bit, then down. But this is a white bullish candle. We've got to have some patience, and I still expect price to hit at least our first take profit level of 1.077, and then hopefully our second take profit of 1.0816. So again, patience is the name of the game, and that's pretty well it. And like I said, I wanted to talk to you about the ATR. So in summary, really quickly, when I give you the first take profit level, I'm looking at the total ATR over the last 14 days, and I'm only making the first take profit level 70% of the 14-day ATR. 70% is a very conservative value price. If it's going to move, it normally does hit the 70 or percent mark, or goes higher, and that's why we have a high winning rate. But right now markets are sideways. Okay, so the final thing I want to talk to you about, this is the inspirational message. To gain a competitive edge in Forex trading is to first understand that you're competing with yourself and no one else. Forex gives you an opportunity to make money, yes, but you need to be enamored by that very opportunity in such a way that it becomes your number one passion. The competition is to continuously chase the Forex dream, to make it work, to make necessary changes, and improve your strategy to make it better. You can always do better. Any other motive, like making quick wealth, will not only let you down, but you'll fail miserably. Always remember that Forex trading is a journey that doesn't end, but the rewards get better in time. Okay, so that is pretty well it, guys. Thank you very much for watching. For the new people watching this for the first time, if you want to receive my basic free trade signals, send me your email address. There's no obligation. It's totally free. Send it to right here. You can see my email, mskyj007@gmail.com. Again, mskyj007@gmail.com. Tell me that you want to receive my free signals, and in your email, let me know your first name, at least your first name, and what country you're emailing from, or what country do you reside in. Okay, so this is it. Take care, guys. Thanks for watching. Cheers from Canada. And I'll talk to you again in the next video. And below the video, there's a like button, guys. If you are gaining a little bit of education and you feel I'm doing a pretty good job, then please just click on the like button. I would really appreciate that. Take care. See you in the next video. Bye for now.